A second problem, impulsivity. Impulsivity occurs when we act before we think. And most often, we'll be talking a little bit later about triggers, most often it's triggered by frustration. You lose some money on a trade, and what's the first thought that goes to your mind? You want to get it back. And now all of a sudden, you're trading for revenge reasons. And out of frustration, you put on another trade, and it's a terrible trade. You get a horrible location on the trade, and you lose again. Very different than really mapping out in your head what markets are doing and planning a trade around that. And finally, a third problem that we commonly see among traders, a failure to adapt to changing market conditions. I cannot tell you how many successful traders I've known and worked with who stop becoming successful because they try doing the same thing again and again and again under different market conditions. There are some times where following a trend works, and there are some market conditions where trend following will not work. Markets move differently at different time frames. There's much more algorithmic, computerized trade close to the market on a very short time frame from the market makers, especially in the stock index products. That's changed how markets move. How many of you have observed how markets have been moving lately at the end of the day, stock markets? Holy crap, what happens in the last few minutes of the day? All of a sudden, the volume expands, the volatility expands. That never used to happen in that way. If you do not adapt to those kinds of changing conditions, you're toast. Because you'll be fading something, and it will move much more against you than you could have ever previously have expected.